Hello everyone, this is Sihan from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Thursday, 30th of December 2021. Let's begin with the Dow Jones Index, where in the previous videos we said that it has been moving in an uptrend in the 4-hour time frame as well as the daily time frame. However, we said that even though it has shown multiple signs of weakness due to the price movement itself, it is still moving in an uptrend. Recently, we can see that the index is moving around level 36,565, which resembles a horizontal resistance level for the index in the 4-hour time frame and the highest price that the index has reached throughout the year, and therefore it is expected to rebound downwards off of it in order to correct towards around level 36,315, and if extended, it will retest around level 36,125 before rebounding upwards off of around any of these levels and continuing to break upwards to level 36,565 and in turn continuing with the overall uptrend. Another thing that supports the downwards correctional movement is that if we notice the 1-hour time frame, we can see that the bullish movement has been losing its momentum, and therefore it further supports the probability of a downwards correctional movement, which will be confirmed upon the breaking down through level 36,375 in the 1-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the indicator moving above level 70 inside the overbought area, it supports the probability of rebounding down, as we said, of around the current levels in order to correct before continuing with the uptrend. That was it for the Dow Jones Index. Let's move on to the New Zealand dollar versus the US dollar. In the previous videos, we said that the pair has been moving in a sideways correctional movement inside the downtrend in the daily time frame, and we said that by rebounding down off of around level 0.6830, it will support the continuity of the sideways correctional movement. However, we can see that recently, upon rebounding down off of it, the pair continued to form a low around level 0.6785, which is higher than the previous one that was around level 0.67, and it is currently being traded above level 0.6830, which, by holding above it, will support the continuity of the current uptrend in the 4-hour time frame that has been started and will continue to target around level 0.6865 as a primary target in the uptrend, and by breaking upwards through it, it will extend to target around level 0.6915. It is important to note that this uptrend that has been started in the 4-hour time frame is still considered to be an upwards correctional movement inside the overall downtrend in the daily time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that due to the indicator rebounding upwards off of around level 40, it supports the continuity of the current uptrend in the 4-hour time frame. That was it for the New Zealand dollar versus the US dollar. Let's move on to the US dollar versus the Canadian dollar. In the previous videos, we said that the pair is moving in an uptrend in the 4-hour time frame, and we mentioned that even though the pair has shown signs of weakness in the uptrend, it is still continuing. We were waiting for it to rebound upwards off of around level 1.2795 or off of around level 1.2760 because they represent a horizontal support area for the pair in the 4-hour time frame, and therefore, by rebounding upwards off of around any of them, it will support the continuity of the overall uptrend. Recently, we can see that the pair has started to rebound upwards off of around level 1.2765 near the upwards trend line in the 4-hour time frame, and by rebounding upwards off of it, it will support the continuity of the uptrend. However, it is important to note that it has also formed a bullish engulfing pattern, but due to the formation of multiple reversal patterns previously and the continuity to form a lower high, it would still be best to wait for the breaking upwards through level 1.2835 in order to confirm the continuity of the overall uptrend, which in that case will continue to target around level 1.2940 as a primary target in the overall uptrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that even though the RSI is moving below the moving average, however, due to the rebounding upwards off of around level 30 near the oversold area, it supports the probability of rebounding upwards off of around the current levels in order to continue with the uptrend, as we said. That was it for the US dollar versus the Canadian dollar. Market Equity wishes you successful trading. Thank you for watching and have a nice day.